Let's now welcome on board the management of Sula Vineyards. That's definitely been the newsmaker all through this morning. Let's try and get a little bit more clarity around what is this wine scheme that the Maharashtra government has revised, and what does it really mean for Sula Vineyards? Rajeev Samant joins in on the show right now. Rajeev, hi, morning. Thanks for speaking with us. Help us understand this extension that the Maharashtra government has come about with of this particular scheme. How does it impact your company?
Good morning. Thanks for having me on the show. This is really good news. This is something that we've been waiting for the last 3 years, the continuation of the WHIP scheme in Maharashtra. In a nutshell, what this scheme does is basically if you grow grapes in Maharashtra, produce wine and sell it in Maharashtra, then you are eligible for a refund on the VAT that is paid per bottle. So it's been an important factor for sure so far, and we've been waiting for a number of years to hear the good news on the continuation. Finally, that uncertainty goes away, so that's definitely a big relief. And it also means that 140 crores of past dues will now flow into our coffers. We hope a large chunk of it before March 31st. So that's really it in a nutshell.
There would be no earnings impact for FY25 and beyond because of this new scheme. Can I safely infer that?
Yeah, absolutely. So, the scheme has been extended for a period of 8 years. That is 4 years retrospective until March 24, and then another 4 years after that. So until March 24, no change, no cap, which is, of course, really good news from our point of view. From April 1, 24 onwards, there is a cap that's been brought in of 20 crore per unit. I just want to clarify that that is not per company. Sula ourselves, as per the excise definition, we have 3 units in Maharashtra. So for Sula, that implies a cap for FY25 of 60 crores.
And is that 60 crore good enough for you, or you'll have to create one more capacity in order to take that benefit?
So, Nikunj, that's a good question. This is always a moving target. As I said, right now we have 3 units. We always have discussions going on with other players, etc. We are not unhappy with it. Maybe it's going to shave a few crores off here and there. Definitely, we'll have to work at it and see how we can get the best out of it. But all in all, it's definitely a huge positive. With this 140 crores, you can imagine that for a company of our size, it's a huge amount. Today, we are borrowing about 250 crores at about 8%. So a large chunk of that will go to pay down some of that debt. Plus, we have some ambitious Capex plans for FY25. We want to build the lowest cost wine cellar anywhere in the world for our low cost wines. So this is going to go a long way towards funding that.
140 crore, will this come with riders, which is that this is pre-tax and tax would be paid on it? It is subject to some conditions in terms of the refund?
Sorry,
No, the 140 crore
that right now. There's no rider as such. Remember, this is a state level thing, so this has nothing to do with the central corporate income tax. It's state level. There's no tax payable. That's a clear amount. That's a net amount. That's a cap. Net of tax.
Right. So any sort of impact maybe you can share with us in terms of ballpark figures as to what the impact would be on an EBITDA level FY25 onwards, say?
It's too early for that. I just want to point out that this resolution, this GR came out after market hours yesterday. So we are just in the process of studying it closely. And I think in a couple of working days or so, we'll have much more clarity on what exactly is going to be the impact going forward. We're also going to be working on how to, mitigate that impact and get the best out of whatever has been announced. So that is ongoing at this point.
The fine print. You've read the fine print. I've read the headlines. Tell us the devil in the detail.
Once we know, we'll be back on this show to talk about the devil in the details.
Okay. But just to set the context here, unlike what a lot of brokerages published in the morning, this is not going to be having an impact in terms of the EPS, and this is certainly not going to have a 15-20% impact on earnings. That's interpretation number one. Second, 140 crore net comes back into your balance sheet, which could be used to retire debt, something which could add immediately to your cost of capital and will increase your EBITDA. And C, in order to really take true benefits of it, you'll have to add more wineries.
Nikunj, you're already leading us in the way that we need to go. So I'm not going to argue with anything that you have said. Only one thing, that of course the retiring of the debt, that will not be at the EBITDA level. That will help at the PAT level, because the interest line will come below EBITDA. But that will mitigate any impact on PAT. This might have a little bit more impact on EBITDA, but because of the interest saving on the 140 crore. That will definitely have a salutary impact on the PAT.
Contrary, if I look
And
at
yes,
the
it's always, Sula is always in discussions. It's a lot of wineries have been struggling, the smaller wineries, and we are their natural port of call when they look to their future, and we are always engaged in discussions. You will recall that we acquired a winery, York winery, just a couple of years ago. And needless to say that we are in discussions with a few others. So the 3 units is not the end of the story.
I distinctly remember, Rajiv, every time we would interact with you, if not the third, the fourth question was certainly about this advantage you were getting from the state of Maharashtra. So now can I safely say that, look, the question no longer is valid because clarity for 8 years has come now?
It's no longer valid. And, I take this opportunity to thank the government of Maharashtra for taking care of this. It's such an important industry. It's such a flag bearer for fruit processing, for agribusiness in Maharashtra. It's really it's a proud Make in India brand. Sula today is a brand that's known across the world. It's one of the few Indian consumer brands that you're going to find on restaurant tables across the world. It's proud. Very proud Make in India and very proud Make in Maharashtra. And it's really changed the face of Nasik. So this is really going to help.
Appreciate your time and all of that clarity. Thanks so much for joining in.